If your salary didn't go up by at least 17% this year, you didn't actually stay level. You took a pay cut. Let's be honest with ourselves. The Naira is hovering around 1,380 Naira to the dollar officially. But when you go to buy petrol, a laptop, or even just groceries, reality hits you differently.
Now, a weak currency is great if you're a country like China. It makes your exports incredibly cheap for the rest of the world. But for us here in Nigeria, where we import almost everything, a crashing Naira simply means you pay more for the exact same life. Think of our economy like the ocean. Headline inflation, which is sitting near 17%, is the choppy water on the surface. It jumps wildly based on rain, fuel prices, or politics. But core inflation, that's the deep, heavy tide underneath. It moves slower, and right now, it is dragging the cost of health, education, and transport steadily.
So if you're leaving your cash sitting idle in a regular savings account, or worse, under a mattress, you are watching your hard work slowly evaporate. You need your money to grow faster than the tide is rising.
So where is the smart money going? First, dollar-denominated assets. You can open a local domiciliary account to park your money away from Naira depreciation. Or if you want your dollars to actually grow, look into domestic USD bonds or Euro bonds. Some of these are yielding up to 9 or 10% in pure dollar interest.
Second, local treasury bills. With yields hovering around 19 to 21%, they look incredibly attractive. Just keep in mind, once you factor in inflation, your actual profit is thin. It's a great shelter for short-term goals like next year's rent, but not a wealth builder.
Third, and this is where real wealth compounding happens, the Nigerian stock market. You want to look at companies with massive pricing power. Businesses that can raise their prices to match inflation without losing customers.
And no, you don't need millions to start. While traditional stockbrokers used to demand huge minimums, modern investment apps let you start building a portfolio with as little as 5 to 10,000 Naira.
Companies like Seplat Energy and Aradel, whose revenues are backed by global oil dollars, or Dangote Cement, because no matter the economy, infrastructure must be built, and they set the price. And financial giants like United Capital, who pay highly reliable dividends that put cash directly back into your pocket.
Finally, there's real estate. Excellent for protecting wealth, but highly illiquid. You can't buy groceries with half a brick, which brings us to the ultimate shield, earning in global currents. Remote work, freelancing, digital exports attack this crisis at the absolute soar.
My grandmother used to say, a traveler who sits down does not reach the market. Money that sits still in a crashing currency is only walking backward. The goal here isn't to panic. It's to choose the right combination of these tools that matches your journey, your timeline, and your peace of mind.
Keep your money moving, secure your assets, and protect your hard work before the tide rises again. Drop a comment below on which asset you're looking at first. Hit subscribe, and as always, stay smart. I'll see you in the next one.